home internet.
Good morning, everybody. I'm Ed Parcaut with Mike Kelly. Yes, we're a few minutes late. We had a long Rotary meeting.
It was a good one, though, basically.
Yeah,
Basically.
we had basically. Don't use that word. That's what I use forever. Some people do ums and ahs and so's, and that was mine, basically.
Oh, I say how you say in my country.
Yeah, well, that's when you're doing a talk. It's not a good thing to say
How
that.
you say in
And
your
you're not
country?
supposed to go, blah, 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 right? You're trying to get people to go, No, you're not supposed to do that.
And you're not supposed to smile at the end of your joke, because if your punchline doesn't get them to giggle, your smile isn't.
Oh, really? All right. What's going on today? Since it's only news for me, I guess you don't have anything.
I don't got much.
Yeah. So the bond market's taken it kind of in the shorts lately because of a few things that have come out. We'll get into that. So we're about down 10 basis points today. We actually had, for the first time in probably 80 days, we had a alert to lock yesterday because we were down a little. I think we ended up down over 20 basis points yesterday.
Yeah.
Yeah. And the 10-year sitting at 4.31, which means we went up. We were at like 412, 413 earlier this week.
Right.
So we went up a lot. It's of course, the fear of inflation. So let's go. Stocks and mortgage bonds, like I said, are trading lower today because of, the inflation fears and ECB they cut rates yesterday. So that caused our yields to rise, I should say, because of the inflation concerns in Europe, which pushed global yields higher. The European Central Bank responded by cutting 25 basis points yesterday. Our current 10-year Treasury. God, what happened to me today?
I don't know.
Coffee. I need coffee.
You spoke so much at Rotary.
U.S. yields are experiencing a more muted reaction, but are still up. Overall, so I'm just going to go to reports since I can't talk. Challenger job cut reports came out. February saw 172,017 job cuts, the highest for this month since 2009, the largest single month since July of 2020. So it is happening. Government layoffs contributed to one of the largest areas of it, but that significant weakness in retail and technology that they're talking about.
So I need to go buy a program and a shirt.
Yeah, something like that. Hiring trends. There is an uptick in hiring in the leisure and hospitality for all these billionaires that need to go places.
Yeah.
Not like us. While Challenger report doesn't correlate the Bureau of Labor Statistics report, it's not the same. We should see a weaker jobs number tomorrow. That's what they're hoping for.
Okay.
All right. Jobless claims today fell by 21,000 to 221,000 after hitting a December highs last week. Continuing claims rose 42,000 to 1.897 million, making it the highest level since 2021.
Ooh.
So basically what happened is people are getting laid off and staying on unemployment much longer.
Because they don't have a lot of jobs to go to.
Correct. There's been a lot of jobs out there, but they're not really hiring for those jobs. They just have it listed. The Fed's Beige Book. Yeah, I've been talking to a bunch of people about this, and I've seen that happen.
What's that?
About the people trying to get a job and all that kind of stuff, and it's not available.
Commensurate to what they were making before.
Or just get a job.
Yeah.
For close to what they used to be hired for, or close to that. There's all these jobs out there saying they're hiring these directors or whatever. You apply, and they said they're going in a different direction, and they still have the job up there.
Yeah. So they haven't decided on which direction they want to go yet.
Exactly. Do we want to hire or not hire?
Yeah. Can we bring someone up from within, or do we just leave this open?
Yeah. Fed's Beige Book, the Beige Book, which provides insight into Fed's 12 districts, shows signs of the economy losing momentum. Consumer spending is declined. Shocking. Isn't it? Vehicle sales modestly lower. Shocking. How expensive are those loan payments?
Well, come on. I mean, he's been president for 64 days.
This has
now?
nothing to do with that. This is overall. What? Whoever would have came into this would have inherited this no matter what. Yeah. This was already in place. This is not because of some changes with tariffs recently.
Be the left side.
I know. Construction activity is also declining. Because remember, Texas was real big on it. Florida was real big on it. And those are two places they're talking about that they're having trouble. They have a lot of inventory. Unemployment slightly higher, but not robust. GDP projection analysts like Peter Brockvar suggest that this points to an economy growing just at 1% to 1.5% for GDP. That's not a great growing company.
That's slowly.
Yeah. Tomorrow's jobs report, the BLS jobs report,
I like that one.
Bureau of Line Statistics,
Yep.
how it was the last couple of years. That's going to come out and that could really move the market. They're actually saying float into tomorrow into that because it could show a drop much weaker than they expected.
So market could improve for people's.
Correct, but it also could get worse.
Yeah.
So if you got
What?
Yeah. So if you got to close in 21 days, I would suggest lock in today because you're not going to earn that much difference.
Do you need a contract
Yes.
and some numbers first before you can lock?
You need some numbers. You can always do one of those lock and shops, which is very expensive.
Yeah.
And you get to float down once or whatever. It's not worth it. I always sell. Just wait till you get the contract in.
I want you to stop, drop, and lock.
Who says that?
Oh, some DJ.
Oh. That's all I have.
That's about all. I don't have anything.
Yeah.
I will have state numbers tomorrow, and I will have nothing else today other than open houses have seen a extreme increase in foot traffic coming through them.
Really?
And properties are selling as a result of the open house, which is very odd. Usually the open house is people go to see an open house to take it off their list and make a relationship maybe with the listing agent or whoever's holding it open. But some properties are selling as a result of the open house. It may be a buyer comes through, says, I'm not going to sign a buyer brokerage agreement because I have an agent. And then they go back and they write the offer with their agent. That can still happen.
Correct.
Oh, is my time up?
No, that's just I have other things to get to.
Yeah, there we go.
I had put things on my calendar to do stuff.
Gotcha.
Yeah.
All right. Well, that was all I got.
That's all you got? Well, that's good.
Unless we want to reiterate, from our appraisal panel that we were on, appraisers really need.
No, we've been doing that every day, but
I
go
know,
ahead. I'll
but
let you
they
do it.
really need you to delineate what concessions were for, whether they were for commission to your buyer broker or whether they were for closing costs, whatever. And please, if your property has solar and it's owned, please put the solar information in the closing statement or your closing so they know what to compare it to.
Correct. Make sure you do that. Make sure you put the concessions in, like you say, and break them out.
Break them.
But if somebody paid what the seller paid for, or what the buyer, if the buyer paid for their own commission, right? Do you have to put that in there?
Yeah, and it only helps you later on down the road. It helps them establish value.
I have a question. Do you have to put in there if the seller paid the concession for the commission for the buyer?
My feeling is no, but the broker panel or the appraisal panel was saying they wanted to know that. I don't think it changes value to the property whatsoever, but there's an argument on the appraiser side saying, well, did you jack the price up considerably to be able to compensate the buyer's agent?
Yeah, but if you're normally compensating the buyer's agent anyway, in a typical situation.
Yeah. It's
I could see. Well, how about when they ask for concessions like closing costs, right? 3% or 5% closing costs for the buyer to cover that. I could see why that wouldn't want to be in there.
Right.
Yeah. So I could see if it was actually not from the actual listing agreement saying I'm paying this amount to the buyer, right? I don't know how you do that, but you understand. Yep. But then go, okay, we're not paying the buyer side. And then they ask for, that money as a closing cost credit to pay for that. I could see why they'd want to break that out.
Yep.
All right. That's all I have. Thanks for dropping that in there last minute.
Peace out.
All right. Everybody make it a great day and we'll talk to you later.
See you Friday.
All right. Bye.
Bye.